Hey, good afternoon, everyone. Welcome to another ACUMA Inside Track. This one's being presented to you by our friends over Class Valuation. We're going to get started in just a few minutes. Probably think, a minute or two past the top of the hour. Um, you're in the right place, I promise you, and we'll get started just a short bit. Thank you. Once again, good afternoon. Welcome to another ACUMA Inside Track. We're going to get started in just a few minutes. Thank you for your patience while we let a few more people file in. Okay, I think we're in a good place as far as attendees. Everyone, good afternoon and welcome to another ACUMA Inside Track. Today's webinar is being brought to you by our friends over at Class Valuation. Again, Class Valuation, we couldn't do what we do without their generous support. So again, thank you very much for that. For those of you who don't know me, I am Peter Benjamin. I'm the president of ACUMA, and it's my pleasure to introduce our guest speakers, or our subject matter experts, so to say, for today's webinar. Before I do pass the baton over to them, just a quick word from ACUMA and a quick update. I would say just keep an eye out for the next couple days. We're actually going to officially start opening up registrations for our 2024. Yes, I said 2024 events. We're first going to start off in December with opening registration for our summit events. Now, these are for credit union attendees only. They will be held in beautiful Phoenix, Arizona, and the amazing Orlando, Florida. And then looking ahead to our in-person events, be on the lookout, for early February for registration open for our workshops being held in Nashville, Tennessee, and Denver, Colorado. Again, that's all I have for our ACUMA update. I would once again like to thank our friends over at Class Valuation for sponsoring today's webinar, but also more importantly, thank you to Sally Carothers and Mark Walser for sharing their amazing knowledge on such an important topic, a topic that I am quite fascinated in. So again, Mark, Sally, thank you very much for your partnership. Looking forward to sitting back and hearing everything you guys have to say about digital appraisals.
Thank you very much, Peter. We appreciate it. Just a quick mic check. Everyone can see and hopefully the presentation and hear us both. And if you are having trouble with that, just ping into the chat and we'll make sure we get you some assistance there. So I just wanted to first introduce myself, Mark Walser, president of Incenter Appraisal Management, recently acquired by Class Valuation. So we are running within Class as an operating group, and Sally Carothers, my friend and the president of TrUnion AMC. We're just excited to do this with you. And Sally, I'd like to turn this first slide over to you just to give an overview of Class and what we're doing specifically for credit union service before we jump into the technology and the digital pieces.
Good afternoon, everyone. It's lovely to be here this afternoon. So thank you very much for joining us. And thank you very much to Peter and ACUMA for having us here. We appreciate it. And first of all, the first thing on this slide is our partnership with ACUMA. We are very proud to partner with ACUMA and be part of that with Class Valuation. I think that everybody knows that Class is certainly an industry tech leader and the largest pure play appraisal management company in the country. So what we're able to do is bring to credit unions a lot of support and resources that that previously we at TrUnion, and I'm sure Mark at Incenter, didn't have. We've got a lot of power behind us. And with that, we have actually created a credit union division within Class. We're calling it Class Union. Now, Class always did have a dedicated credit union side, but with the acquisition of Incenter and TrUnion, we bring on a lot more credit unions. And it was decided that we really need to have a freestanding division to service all of you guys. And we're very proud to do that. Keep it quiet. You guys are the first ones to know about it. The official announcement will come out on Friday about that. But within that, we will have, we're going to talk about the dedicated group that we have in that Class Union division. I got to get used to saying Class Union, so I apologize for that. Class has, well, I think over 550 employees. I think we might be growing at that point. 20,000 appraiser partners, and we actually have 250 staff appraisers, which is amazing, that are dedicated to do work for each of you guys. And an incredible amount of appraisals, 2 million appraisals completed and 40,000 digital appraisals. So it's a huge company in our kind of niche of things, and brings to you a lot of support. So let's talk about our Class Union, our credit union valuation solution. First of all, we will have a dedicated credit union account executives. So your frontline people will only deal with credit unions, no other lenders. So we're not going to mix you up with the Rocket Mortgages of the world or anyone else. They will be trained to service you guys, credit unions. There will be a dedicated client services director. I'll keep that secret, who that will be, just to say that some people will know her name when that comes about. And we will have dedicated quality control and an escalations group. The thing I'm really excited about, everyone kind of keeps hearing this today, because I only found out about it today, was a dedicated experienced concierge just for digital appraisals and inspection-based waivers. And this is a single person who will help you with anything that you need on the digital side. As Mark goes through the deck to explain these digital appraisals, that there's a lot of people are unnerved by them. They're afraid that it's not the same as it has been before, but this person is there to walk you through. So, for example, they can't find your address, or has the inspector been found, or is the appraiser getting the right data? All that you can go to this concierge. I love this idea, and I think it's wonderful for credit unions.
Absolutely, and I'll pick up from here. And as we get into the actual technology, let me just underscore that point for everyone on this call. All of you in mortgage operations know that size matters in some ways, but also it doesn't matter, right? It's about the individual experience that each member has. Credit unions being very member focused, you want each one of your customers to have a good experience with this process. And there's been plenty of trips and falls from a lot of different sides of this business over the last year and a half, and you don't want that with a digital appraisal or an inspection-based waiver, as we call them. So that team that services this group of appraisals is very experienced, and I like the bifurcation also for another reason, Sally. As you oversee operations in this group of Class Union, their focus is going to be on managing appraisals and appraisal orders, and not having to chase down the minutia of a digital inspection process. That hand-in-hand partnership between this group and the appraisal management teams, the credit union account executives and directors, is really going to serve credit unions very well. So let's get into what this is. We call our offering Property Data Advantage. So that is the Class product for the digital inspection waiver products, for property data reports, and for the hybrid appraisal. I'm going to again just go back to the member experience real quick. The member experience has to be good. It's not just for, hey, did we turn a report to you? Was the person on site who visited professional, engaging, and timely? Was the experience an easy one for the borrower at the house? And then once it's done, do they have to come back? Are there going to be mistakes and issues that have caused this process to get drawn out? And I think that's what Class is probably more than any other AMC with their solution has really worked on those issues. And I'm really excited to kind of tell everyone here on the call that not only is the technology great, but you're not a guinea pig either. Because as Sally has mentioned, there are many other folks, many other lenders in the industry who've been going through the GSE pilots with Class and have done tens of thousands of these digital appraisals and property data inspections. So this is a very well-tested process that's really well borne out. The second advantage it has is it's fungible. So the property data advantage process can allow you to flip between a Fannie or Freddie loan at will. See, right now the GSEs are aligning their data sets, and that alignment will be complete and announced sometime before the April 1st as it goes. But right now, today, Class actually has this fungible product. So we can do an inspection for a Fannie Mae waiver, and then the lender can close it. And then maybe a week or two later, due to capital markets benefit or something else, they're like, you know what, we want to take this loan and sell it over here to this investor, but they're a Freddie Mac investor. Well, with our product, you don't have to pay an extra for that. If you have a PDR eligibility on that loan, then you can just come back to us and say, hey, remember that property data report we did for that Fannie Mae loan? Can you give us the PDR? And we would be able to actually generate that for you and deliver it to you with no extra cost, because that same inspection, that one inspection, took care of both. Also, we have seamless order workflow with LOS, POS, and appraisal management systems. All of you out there use different different systems. Some of you are using Compass, others use Mortgage Cadence. Some of you have middleware like Mercury or other solutions landing in there, and you're divvying up orders to different AMCs, and all of that's great. You don't have to change your process. You can seamlessly integrate what we're doing here with property data into that workflow. There's a lot of customization options. Sally mentioned a few of them, the dedicated team being the best, but we also have solutions for some of you who joined today who may be managing your own internal appraisal process. This is something that a lot of lenders have been moving away from over the last couple of years, but we're very well aware that there are credit unions out there that still have a direct panel of appraisers and still try to engage those folks directly. We have solutions for you just to be a fulfillment mechanism for property data reports so that you can work with your appraisers that way if you'd like, or if you just want to manage the entire thing turnkey, we can offer that service for you too. We do use custom appraiser panels as well. That's a question we get asked a lot by credit unions. So preferred appraisers in your chosen markets, we're able to provide the ability to send orders to those folks. And in the case of digital appraisals, when we collect property data, we can also, again, send them to your appraisers so they can fulfill the hybrid appraisal. Sally mentioned our staff appraisers. And I also want to just point out home equity products as well. A lot of you are focusing now on home equity and portfolio products. We'll talk about that a little bit later. But I'm really excited about the way that these digital inspections will be able to bring veracity and source of truth to that lending model as well as the forward mortgage model. So let's go to questions that you might be asking. I just put a couple of questions here that Sally and I have heard over the course of our time in the industry. I remember being at ACUMA, and Sally did a great job teaching an appraisal webinar there. And Sally, when you asked this question, you asked how many people have done a PDR or PDC. 2 credit unions raised their hand out of a room of over 100. So I tried to encapsulate here some of the concerns we heard that day and that we've heard since. You guys can read it for yourself, but we do have a survey, a little poll. So we're going to do a little bit of fun today on the webinar. Get some of your input. Want to do a poll, so that's going to be popping up here shortly. And I also want to say, for those of you who stay at the end, we do have a gift giveaway for attendees, credit union attendees that are there at the end. So stick around for that too. But here's our first question. Have you ever ordered one? So just let us know. And then we'd love you to just maybe in 1 or 2 sentences type, what's your biggest concern about this process? What have you heard? What are the things that maybe not only great, but maybe alarm you a little bit or concern you a little bit? Those are all things we'd love to get feedback on, because it's things that not only we can answer, but maybe you've thought of something that we haven't thought of, and we want to hear from you on that. And then, of course,
Well, can I take the last one? Because it's my
yes,
favorite one.
please do that. Yeah.
This is my baby. So it's the appraisal modernization. It also plays a big role in reducing appraisal bias and discrimination on appraisals. And I'm kind of asking any of you guys if you're interested in training on appraisal modernization and fair housing. And I like to go out to credit unions and do this. It is being asked for a lot. I think it's important. I'm actually currently in Peoria, Illinois, because I'm doing a class for SEFQ, plug for SEFQ, because I know they're on the webinar. So I'd love to come out and do some training. It usually takes, we usually do a day. You can split your processes and loan officers and underwriters up so they don't go off so you don't have everybody off the floor at the same time. And we'll do it in 2 halves. So let us know. We'd love to do that. Thank you, Mark. Sorry.
You're most welcome. And it's actually a great transition to the digital process too, because bias and discrimination in appraisals is actually a very large topic. It's one that all credit unions, all lenders, broadly speaking, have to address. And while digitizing the appraisal process and bringing digital data into the process doesn't solve the entire problem, it does take a big step forward for allowing appraisers to provide credible reports without some of the personal bias potentially that could enter the process. We call it being able to appraise the property rather than the person. And while I would say most appraisers do a great job of this just innately, and there's always been that small percentage where sometimes you question it. And so we think that the security that's provided for the data in the process is something that is going to be really strong for both lenders as well as for the GSEs. So let's jump into this. I'm going to move on to the kind of where all this began, and then we'll just jump into the technology. First off, Sandra Thompson made this announcement on October 18th, 2021 at the MBA. There was a big roar that went up when she talked about desktop appraisals. But basically, the GSEs and the FHFA and everyone else in the lending world is committing to this, to moving the process forward to bring additional data and risk elements in. The desktop appraisal was the start of that. That came out in 2022. There's specific requirements for that. It's still in permanent policy today. You can use it today. We use the desktop appraisal today at Class to deliver a 48-hour purchase appraisal in many markets in the country, because the appraiser doesn't need to visit the property. You just need certain criteria like a floor plan, verifiable data, MLS access, and that sort of thing. We'll show you how our technology addresses that. Added this year was property data and waiver. So this is the big topic for this year. PDR, ACE plus PDR on the Freddie Mac side, value acceptance plus PDC on the Fannie Mae side. But this is basically your new waiver. We'll go into the spectrum of options and how this plays. And then what's coming in 2024, I think, is the ultimate game changer, and that would be the hybrid appraisal. Several of our lenders have already told us that they've seen the announcements that April 1st is when they can expect to see these coming through in DU and LP from a permanency perspective. So that's great, and this is a perfect time that you're on this webinar right now to get set for it, to not only explore it, but put some of these processes in place so you can pull the trigger on these, both now for property data and waiver, and very soon here for the hybrid. Now, why is all this happening? Let's walk back in time just a little bit. All of you are around, I hope, for COVID and for 2021. You all remember what happened there. It was frankly kind of a disaster. We had rush fees and turn times off the charts. We had appraisers unable to get to properties timely in many parts of the country, many states. You saw an expansion of turn times, which was frankly just beyond the pale. I remember having to tell lenders that in Oregon, an appraisal was going to take 6 weeks, and it was that way for months and months and months, right? In addition to the appraiser bias, we just have a reality that it's an aging profession. It's average age of appraiser, depending on which source you ask, is between 57 to 60 years old. There is a need to scale this population and what they can do, and nobody wants a repeat of those capacity issues. So just to kind of show you that in some stark numbers here, some of you may have seen this chart. But if you haven't, this is available. Fannie and Freddie do track this and publish it on their website. This was a recent one from earlier in the year, but it shows you that the number of appraisers to handle the capacity of refi purchase volumes has been tested over the course of the last 10 years. And you can see it's progressively gotten worse. 2020, we had an unprecedented boom. It's more refi than we've ever seen, more purchase than we've ever seen. And that same number of appraisers just really couldn't handle it from a national perspective. And not surprising. When you look at July 2022, when we had the trough and the collapse of the refi market, you can see what happened. For the first time, we saw a large drop in the appraisers that are available to do reports. We're almost 7,000 appraisers from what we can see have either left the industry permanently or temporarily. So it's certainly an issue. And that's why digital modernization needs to take the forefront. Otherwise, yeah, we could be looking at an even worse situation the next time we have any sort of recovery. So what is that solution? What is the long-term solution? It is the desktop and the hybrid appraisal, right? The GSEs have tested this extensively for years, almost 4 years now. The hybrid appraisal has been in beta. Class has been in there for that entire time, testing tens of thousands of these appraisals with various lenders. And basically with that single property collection, we're getting everything you need for either a desktop appraisal or for a hybrid appraisal. That would be the imagery and the data, the ANSI aligned floor plans. We'll get into that in a second. What does that mean? And of course, the data set that you need for the PDR and PDC. So this is the preparation right now. The waiver that you're doing today under PDR and PDC is really a layer of preparation for what's coming for the full appraisal products as we go. So just to kind of give you some facts and figures to write down and take away. Price, quality, and speed are really the overall goal here. We want to make this adoptable for you. We want to make it a quality process. For class, the flat rate is $275 for each inspection-based waiver product that we do. So when you order them, again, that includes the person going to the property, assembly of the report, getting it together, submitting it to the GSEs on your behalf, and then giving you that fungible product. So it's a flat rate, any state, any product, you guys can plan out for this. I want to touch disclosure, and then I'd like to let Sally also just step in on the member experience and some of the servicing pieces around this. On the disclosure process, because I get this asked a lot, how do you disclose something like that? My recommendation is that you disclose your full appraisal fee on everything as normal. So for example, if in your area, a full appraisal is $600, disclose that. Then run your LP and DU approvals, and when you're getting the result back that you could do a waiver and maybe take advantage of a PDR PDC, I would have a conversation with your member. This is something that we can support too. We can help provide some talk track for you on that. You'll just want to have the conversation of saying, listen, it looks like we might be able to do your loan without an appraisal. Fannie and Freddie have accepted the appraised value of the home on the contract. So all we need to really do is just do a property data report, have them be able to see the condition and quality of the home, and then we should be good to go. That cost is probably going to be around $275. And then you can just let them know we're going to keep your disclosure at $600, because there are some rare cases where we might not be able to fully proceed with that. As you all know, sometimes the waiver can be withdrawn for various reasons. So if that happens, you're not having to redisclose. You're just simply saying, okay, we're going back to an appraisal product, and we'll go through some of those options in a minute, but you really have a ceiling there and you don't have to redisclose the cost of the appraisal. Sally, you have anything to add to that? You're muted, by the way, sorry.
Sorry, I was muted. Just a couple of things, Mark. Thank you. For some of our credit unions, I know that you like to have your appraisal, and we're going to say the appraisal's not going anywhere. There will still be a need for appraisals. It's just that I think we have seen that in order to keep fulfillment within a reasonable turn time, we have to take more appraisers out of the field, and letting them work from a desk and do the data, look at the data, analyze it, come up with a value, rather than be out there trunching around the house, measuring, doing things like that. It's a lot more efficient and a much better use of their time. So I think that this is what Fannie Mae and Freddie Mac see, the GSEC, take the appraisers out of the field, let them do what they're supposed to do, what they're trained to do, which is analyze, report, And also it takes away a lot of the subjectivity that we have in the appraisal business right now. And that is an incredibly important thing that we've kind of let the appraisers go wild almost. And you'll see so much subjectivity. They may not intend to do it. They've been told that they are being paid for an opinion. So they're going to give you an opinion about everything, whether it's the neighborhood, whether it's the house, whether it's the not just the house, but whether it the condition, not just the condition, but maybe how tidy it is or whatever it is, that they have an opinion on everything, which is, I get it, but I think we need to take that subjectivity out of the appraisal process, and this really allows for that. The appraisal is still going to be there because someone's got to feed the model of data that the GSEs need. Yes, that will come a lot out of the inspections, but we still need to fuel data as far as values and things like that. So there still will be appraisals. They're going to be different when we've just got to understand that this is, I know, I fall into that. Oh, maybe I'm a little older than that age gap for appraisers. I may be a little older, but I know we're always a little slow to move and don't really like change, but this is really good. And I've actually been saying this for years. I think that desktop appraisals, hybrid appraisals, having someone else do the inspection, someone qualified to do the inspection, it doesn't have to be an appraiser, really seems to make sense to me. Over to you, Mark.
No, appreciate that. And I think you hit on one point that I know I've heard expressed from various folks in the industry and the agencies that, you know, one frustration is that you can send 5 appraisers to the same property and you're going to come back with 5 different square footages, 5 different measurements of the home. And if we're all trying to measure or supposedly measure to AMC standards or to a square footage standard that everyone should adhere to, why is it that we get that variance, right? There is one true square footage of the house. And I think with the level of the technology is, and some of what we'll show you today, you're going to see how accurate it can be and why it's great. Just a quick thing on how digital appraisals work. You create one order with us and we assign it both to the appraiser and to the property data collector in our network. Property data collector is going to go do that interior and exterior inspection using the 3D data collection technology to generate the imagery and also the different pieces of the PDR or PDC report that are needed. We then deliver that back to an appraiser and they're going to complete the appraisal. Sally mentioned our staff appraisers earlier, the 250 or so staff appraisers we have in key markets. That's how we're delivering 48-hour appraisals for a lot of our lenders using the desktop process and also the hybrid process. Now you're going to have that opportunity, generally speaking, with all appraisers to be able to do something similar. We like to quote, you know, somewhere between 48 to I would say 2 to 5 days for a full turn time, depending on where you are in the country and which appraisers we're using. But the nice part about that, if you really think about the model that Sally just articulated for the way the appraisal community engages, if they're not having to leave their desk, and when it gets busy, you really shouldn't see this turn time change all that much because the inspectors are going to be able to keep going out and doing their imagery collection and data collection. And the appraiser is just going to be able to sit there and continue to analyze properties. I do want to point out that the appraiser that's being used here is also a local appraiser. So it's not like, for example, it's a California appraisal in Los Angeles, and we're having some appraiser in San Francisco doing that. It has to be a locally competent appraiser who's able to be there and actually field these data collections and do them properly because they have MLS data, they have the experience in the markets, and they have competency. Competency rule in appraising still applies here. So you have to have competency in the market. What it does open up though is appraisers who are not in the areas, but they are part of the area. For example, if you have an appraiser in, say, San Diego, they're on vacation in Hawaii, but they could work on a report if they wanted to. That competency still exists for them because it's their home market. So it does bring a lot of scalability to the process. And kind of give you just went a little far there with the slides, just give you a little bit of how this works. The property data collector, who is that person? This is important. This is the person who's going to be walking in the door, interfacing with your member. So we want to be able to kind of give you some surety on who that is. Those people we're property data collectors. For us at Class, it's a combination of trained inspectors, real estate agents, notaries, even appraisers and appraiser licensees who've taken these courses with us. We have our own courses. They have to pass that course. They have to take a test. They have to scan a home, whether it's their home or a friend or neighbor's home. They actually have to do that and show us the result and the proficiency with the technology to be able to pass the test. The process itself is one of automation. The property data collector doesn't actually do the measuring of the home. The technology does. Using the LiDAR technology that's based in the iPhone, we're able to create volumetric modeling of homes to be able to measure them down to a very, very accurate square footage, right? And that's what we're generating to give to an appraiser. So this little device you see here is our hero product. So we call it the Class hero device. And basically what it does is you stick your iPhone in there and activate the software. It does an automatic spin of the property going floor to ceiling, and it captures a 360-degree image view. It creates, for lack of a better term, a complete digital twin of the property and essentially a virtual property inspection. I'm going to pause from the PowerPoint here and go ahead and kind of go live and give you just a quick look at what one looks like. It's always a risk when you're on a Zoom and trying to do something live, but we'll do it. Okay, so this is just want to give you guys some real world. This is what an appraiser sees. So when we finish a property data report and we're delivering you the report, the appraiser, if we have to do a hybrid, is getting this data set. They get the entire data set of the PDR and PDC. They have images that we've actually pulled out and smart tagged and pushed into their appraiser software templates so that they can just import it without having to manually upload images one at a time. Appraisers over time have told me that one of their kind of pet peeves with certain parts of the process of doing a property data report based appraisal is that they have to drag all these images in and read this giant 70-page report. With us, you don't have to do that. Class has actually created integration with appraiser software so that they can just import it and then have it intelligently placing it on the report for them. But nothing replaces your ability to see the property live, right, Sally? Your virtual inspection. So this is the virtual inspection. So I'm gonna pop into the inside of the home. Love to have you give an appraiser's perspective as well, just in terms of how comfortable you would be.
Well, the first thing, when you showed the first picture, my immediate thing was when you were outside, I'm like, is that a 2-car garage or a 3-car garage? And then you kind of pulled out a bit and I saw it was a 3-car garage. So that, as an appraiser, I'd be kind of looking at that going, oh, I don't know. But
and now we get to go in and see. That's exactly
see how many, and it probably really is it is just about a 3-car garage, although like any 3-car garage, you can't get a car in that extra little bit, I tell you.
Maybe a smart car. I don't know.
Yeah.
But you have this ability if you're an appraiser, and you guys can see, all of you watching on the webinar, you can see how as we jump to different points of the home, how it changes perspective. And you can kind of see which direction you're moving, right? If you're the appraiser. So you can kind of look at the front door, you can say, oh, they've got security on it.
Yeah, I love how it will go up into the ceilings. You know, as an appraiser, that's something that, you know, when we walk through a house, we always look up just in case there is a roof leak or something like that. So pretty amazing stuff.
And we're going to get to, for you all credit unions on the call, we have a free guide we're going to give you in terms of being able to give it to your operating teams, your processors, and your staff, so they know what to do when they see things in here, right? That are also potential issues. There are different ways to deal with those fixes and those issues. One thing I noticed in this report, as I was looking at the actual report, was that there appeared to be power lines on the Google map close to the property. So this is one thing I like to highlight on this particular one here, is that the appraiser can actually see, oh, there's the power lines, and here's how they potentially impact the marketability of the home. You can see, is it close? Is it far? You know, is it something that's an actual eyesore? You can make a determination of some of the intangibles like that you wouldn't just get from 3 or 4 pictures of a room. You have the full 360 spin, right? That you can walk in and walk out of the house, go around it, look at the exterior, look at the interior. Oh, and by the way, appraisers can actually grab photos from this too. So I mentioned we do about 180 pictures per spin and they have access to that gallery of photos. But if there's something that they want to be able to, for example, just have a shot of this fireplace. They have the ability in their appraiser software to go ahead and just snip a copy of that, get it out, and bring it into their report. So it's pretty amazing stuff.
Is there a
Go
way
ahead.
for them to blur out those photos too? Those the pictures and stuff like that?
Yeah, there's actually some AI that we're working on to apply for that and to do
Good.
that. But appraisers themselves can actually do that as well, and their software, as you know, they have the ability to do that. Let's be real, most appraisers I don't think do that. When they're taking all the pictures of the home as they walk through the house, they're sticking it on their laptop and putting it in their work file. And if you had to ask me if that was encrypted and safeguarded for the rest of time, I would probably say no.
I'm
But
fighting with one right now, so
yeah, but when you have a process like this where we control the inspection, we have so much more ability to do things like that. And applying AI, by the way, on this process is really amazing. We actually have technology right now that can actually, when you go into this kitchen, for example, oops, that was the interior window. When you go into the kitchen and you're into the hallway, you can actually have it look at the kitchen and determine what kind of appliances are these. The AI can actually call out, this is a stainless steel appliance. That appears to be a stone countertop and some type of tile on the floor. It can actually call those things out and verify it. The appraiser doesn't have to agree with it, but they do have a helper right on the side. That's what some of this technology is capable of doing. So as we advance it, you're going to see more and more incorporation of artificial intelligence and computer vision on these images to allow for additional quality and condition reporting that's going to lower risk for credit unions as well. So I'm really excited about all of the aspects of this technology. Don't want to turn this into a nerd fest for everybody on the call, but I wanted to give you all a real world view, not just a slide shot of what's actually happening. Let's touch base real quickly on the valuation spectrum as we go here. So we're about a little more than halfway through, and we'll finish up and get to questions here in the next say 6 to 7 minutes. So just so that you're all aware of what you're looking at with the spectrum, Fannie Mae and Freddie Mac call their waivers different things, but they are waivers, right? This bucket here is what you've seen growing: value acceptance and property data. Depending on where you are in the country, probably represents between 6 to 15% potentially of some of the approvals that you can see. We'll show you a DU approval in a second, so you all know what to look for. But then you have the appraisal dependent products. So this is where in the hybrid and the desktop, the inspection is going to be supported by an appraiser looking at it from their desk. And then of course you'll have the traditional appraisal as well. So the traditional appraisal is going to remain, as Sally mentioned. It's not going away, but you'll just see it over time turn into a smaller and smaller chunk of the overall. Not sure about their exact numbers, but I do know that there's a drive to move these buckets here, value acceptance, hybrid, and desktop, into if not the majority, certainly the plurality of appraisal orders. And this is what's going to insulate us from 2021 Part D, whenever it happens, right? When we have these new options in the industry, you don't have to go, okay, my God, the appraisers can't get to the properties in time. I want to give you some real world results, and I want to stress this again for every credit union on the call. You and your members are not guinea pigs with the class process. We have done tens of thousands of these through the beta process with the GSEs and with the participating lenders. We have honed it. We have brushed off a lot of the rough areas of the inspections. We've learned. And I can tell you, prior to my acquisition in class, being a technologist and working in the GSE modernization pilot, if you aren't doing hundreds and hundreds and hundreds of these on a weekly or monthly basis, you're not getting the experience to be able to know what works and what doesn't work. And so that's something where I think we're very excited about Property Data Advantage and what it can do for you on the credit union space, because you've seen the real world results. So over here on the right, you'll notice that this is just data from the pilot, from all of those tens of thousands of appraisals that have been done. Underwriting revisions reduced by 85% across the board. We've had a considerable drop in reconsideration of value requests. Why? Because the homeowner, the agent, the underwriter, Fannie Mae and Freddie Mac, everyone can see the condition of the home. And it really does reduce the amount of questions you get on, hey, did they take into account the fact that I had upgraded countertops and I put those $20,000 blinds all over my house, and or I guess wood shutters all over my house? Did they take that into account? You can kind of see that they did, because you're looking at all of that data. So, and the other thing is you just get speed. So this is kind of in a normal process. These are on about two days faster on average than a standard 1004. And then of course, you know, when you get busy, they're kind of going to stay at their average turn time while a traditional appraisal starts increasing. So the other thing that we really have as well is kind of a lack of having to go visit the property again, because we've done so many of them. Blurry missing photos, not a thing. Missing rooms or visuals, not a thing. The application doesn't let our inspectors leave until they've captured everything. There's verification through the process. So we never have to send somebody back for a second visit to the property. I can attest to you personally, having done these with other vendors over my last couple of years. There's been probably 5 to 10% failure rate with some of those other processes where they were just sending in people going in and doing pictures. And then we get the report back. It doesn't meet the PDR and PDC requirement. It can't be submitted, and we can't go remediate it. And then I had to sit there and basically tell my credit union or my lender, hey, sorry about this. I have to get a rush appraisal, send an appraiser out to the property. I'll pay for it, but it doesn't matter. At that point, the damage is kind of done. And it's a tough experience. Even if it's only a few percentage of the orders, it really sucks. So being able to stand behind a process where we don't have that happen has been amazing for Incenter. I think TrUnion would attest the same. And it's been so great now. I was with a couple of our lenders last week and asking them, how's it been going with all the PDRs and PDCs you've been ordering? And the feedback was, it's been amazingly smooth. I've had no issues. And that's great to hear, right? For people in Sally's position and my position, that's what we want to hear. If we're not hearing anything bad, then usually it means everything good is happening. We only hear when there's going on that's bad, right?
Yeah,
so
something to add to that, Mark, that I want to say, because actually, we had not done a bunch of them at TrUnion, and I think that's the reason we were dedicated credit unions. And I think that I hate to speak for you guys all out there, but I know there's a concern of risk. And let me just kind of go back to the value acceptance or the appraisal waiver. The reason that you're getting a value acceptance is because Fannie or Freddie have a ton of data. They have all the data they need to say, hey, you know, we're okay with the value. We just need the collateral looked at. But, you know, the value, we've got all the data there to indicate that value is reasonable. It seems credible. It seems okay. But we need, you know, if they're going to do a PDR with it, we need the inspection done. So I think that that it really does alleviate some of the risk. If you have that understanding, they're not just saying, hey, you don't need an appraisal. Hey, this is just a waiver. Right. That acceptance is backed by all the data, and they have an absolute ton of it. And that data still has to be fed. That's why there will still need to be inspections and appraisals done, just to feed that data. But if they're saying it, it alleviates the risk. And I know we're going to talk about reps and warranties, but that is, you know, even I know some of you still do have the concern, you want boots on the ground appraisers out there, but you know, there is still good data to indicate that that property is okay.
Yeah, I think it's a great point, and that's a perfect tie-in to this next slide. This is a DU approval that you saw, and when you're looking at it, right, you're seeing that there's an acceptance of value for the property, right? And this acceptance of value, right, is the line item that you're looking for, and that's going to give you reps and warrants on the value acceptance. And what we tell people is take the waiver, right? Save the time. Don't sit there when you have that on a loan. Why roll the dice with an appraisal? Because honestly, you don't know if the appraisal is going to come back on value and support the value. Because again, the appraisal opinion is subjective. So between the two, I'd be looking at it and saying, well, I can save my borrower, you know, a lot of money on the appraisal report. We don't have any risk from buyback from a value and acceptance standpoint. That's been handled. And then the third thing is we can save a ton of time too. There would be almost no reason. It's a no-brainer, right? To not do that. You should, in fact, I would say your risk may be in fact higher going with, in that scenario, that particular scenario, getting an appraisal, because you don't know who you're going to get. Not only do you not know whether the value will come in to support the loan, but now you're back into, hey, it's an appraisal and it needs to be ripped apart and it needs to be reviewed, and Fannie and Freddie have to accept it, right? There's always that element right now of buyback and risk that's there, and it's in the market. So why go down that road if you have the ACE PDR, or if you have the value acceptance plus PDC? You're going to have that waiver today, right now. So I just wanted to give you a little glimpse of what to look for there. And then repairs and corrections. This is a question we get asked a lot. This will be on the guide we send out to all of you after this webinar. But some people ask, how do we do this? So what if we see, these repairs or items that may look like damage? Sally mentioned maybe water damage or some sort of ceiling damage. How can I see that and make that go away? So here's your basic guide here. The inspector that we send to the property data collector that we send, they're the ones who initially are supposed to look at repairs and functional issues as part of the process. That's why they're going through the checklist. And if they see something, they need to say something and indicate that on the report. So that'll come back. But even without that, you're going to have situations where you as the credit union get it, and your underwriter is looking at the data and going, something looks off about those pictures. I see a spot on the wall that's kind of weird, or maybe you're just seeing something that looks kind of like it's in disarray, and you're saying, what, I think we need to ask if that air conditioning unit really works well, or if it had any observable damage on it. You can then ask for that remediation through what's called verification of repair. So appraisers, by the way, also have the same responsibility when they're looking at the data. They should be able to see and respond the same way. Fannie Mae gives you a bunch of options. So today in policy, and this is also policy for regular appraisals too, I believe, but borrower may provide an attestation letter with evidence of repairs. So for example, let's say there's a hole in the drywall, and just make something up. The front lawn is all dirt. It hasn't been put in. And it needs to be, sod needs to be put down. Silly example, but let's just say that's the case. Okay, then if the borrower just goes and remediates that, puts the sod in, they can take a picture of it, as long as the picture has metadata on it. Metadata means you took it with your iPhone or something similar, and there's a timestamp and a date stamp on the picture, and they email it to you and say, they just put a little note in or a letter saying, hi, I, Mark Walser, repaired the front yard and I put sod in, and here's my picture. As long as you have that, that's all you need. You can submit that to the GSE and be done. You can also verify the repair with a property condition report. We do offer those. Cost is $150 for those. But if you want, you can have us go take our inspector and send them right back to the property and take a photo to verify. That's on the Fannie Mae side. You also have a contractor repair as well. If it's something larger where a contractor has to repair, photo is not necessarily needed. I recommend just having them take a photo anyway, but it's their invoice where they said, we repaired the furnace, and here's my date and my signature as a contractor. That's the thing you need for those types of repairs, and that's what you would send in. Freddie Mac's verification repair, that's different. They require right now, today, as of this webinar, property completion report, order from the AMC on everything. So no borrower attestation or self-attestation is permitted on the Freddie Mac side at this time. So if you have a Freddie Mac based loan and you need to get inspection repair or verification done, you're going to have to order a property condition report with us. No problem. We'll send back the inspector and get it done. Just plan for an additional $150 in the process. Anything you wanted to add to that, Sally?
No, I think that's great. I think we just got a little here going through our digital products that we have of our home equity portfolio loans, and we are going to give a little bit of time for questions.
Yeah, absolutely. And just as the questions start rolling in, I will say we are applying digital evaluation and inspection to home equity and portfolio loans. As you can see from the screen here, we already have a pretty wide variety of home equity products that a lot of lenders use. But you can imagine what you just saw when you saw me do the 360 spin. You can imagine how that can be applied to your portfolio lending as well. And I know that's a big thing for a lot of you on the credit union side. You're looking at that as a growth opportunity over the next 2 years. So we're actually wanting to partner with you on that. one size does not fit all on the portfolio side for credit unions. So we want to learn as much as we give. So for those of you who are interacting with us or will email us afterwards, we would love to talk with you and open a dialogue with you about how we can help customize some of these products using some of the digital data you've seen to help you guys with risk. And if you're going to keep loans on the books, make it a stronger product for you overall. So resources and giveaways, and then we'll get to questions. Again, make sure you email us for a free lender guide for your PDR and PDCs for your staff. This is an agnostic product, so it's not a class commercial. It's, hey, here's what you do with all the different situations that could hit you. And then you can just hand that out and do some training on it with your staff. Sally is available as well as I to do web training on appraisal modernization or fair housing practices for you. Definitely encourage you to take advantage of that and reach out to us for that. And then again, we're here to offer a free review of your appraisal process, LOS system compatibilities, just answer your general questions about PDR and PDC. And we'll do the drawing next, and then we'll get to some Q&A. So just real quick, I just want to stress this drawing's for credit unions, and we just have our way of saying happy holidays and thank you for joining us on the webinar. So you're going to get, I think we have Holly or Liam in the background doing a randomizer. So we don't know what name's going to be pulled here, but they'll throw it in the chat when it's ready. So
no cheating, no cheating.
Yes, we do not fix contests here.
Why do the presenters not get a chocolate box? Mark?
I don't know. Maybe we are the treat. So, all right. So let's look at a couple of questions that were asked. Question number one in the chat, what are the average time savings that you're seeing? Okay, so the answer there is it depends. I know. On average, about 2 days, hybrid appraisal versus a digital appraisal. For a property data report where it's just a waiver, it's really fast. Because usually what happens process-wise is you're sending the order in, and then our team is getting on it. We're assigning an inspector in our network already, and they're making property contact almost immediately. Typically, most of our inspections are done the next day or the day after. It depends on the borrower too. Can they schedule in time, or what day and time are they available? A little bit of coaching here. You do want to have them set aside about an hour for this process. It doesn't always take an hour, but just letting them know expectation wise about 1 hour, because it is a pretty comprehensive data collection of the property with all that imagery. So we just want to give them time, and the inspectors are trained to reach out to your borrowers and try and expedite that book as soon as they can and all the rest of it. I hope that answered the question. Are there ever any instances, next question, that the PDR isn't enough? What happens then? The answer is yes, there are some rare instances where the PDR is not enough. We can't tell you all the reasons that GSEs pull waivers, but they do sometimes. So when they do, what happens is you have two options at that point. I think my screen is still showing, so I'll just jump back up to the spectrum here. So you have a PDR or a PDC. You order it, you pay the $275, or your client does. We get the report, everything is done, moving on, and then a week before the loan closes, something changes in the loan. Fannie or Freddie reach out to you and say, sorry, we got to pull the waiver. We need you to get an appraisal. You have two options in policy currently at that point. One, you can order a full appraisal, a traditional report, and that is always a kind of a last ditch option. I would say that's your second stop, but it is there for you if you need to do that, and you'll pay the full $600 in my previous example. Or you can upgrade to the hybrid. The vast majority of the time, they're going to give you the option to take your existing PDR or PDC of the property and just get an appraisal hybrid done on it. So what would happen in that situation is you'd reach out to your team and just say, hey, I need to order a hybrid appraisal. We did this PDC a couple weeks ago. What we'll do is we'll take that, give it to one of our local appraisers in the network, or if we happen to be using your preferred appraisers and we've customized a panel, then your panel, we'll ask them to go ahead and take that 360 spin and all the data we give them and go ahead and churn out a 1004H. By the way, appraisal products here that you're looking at, 1004H 70H hybrid is the form for the hybrid, and then 1004 desktop /70D for the appraisal form. If you've never seen those, Sally or I can send you blank copies of those so you can look at them, but you'll find that they look very, very similar to a 1004 URAR.
Very, very similar. Very similar.
Yeah. which is also positive for underwriting, right? So you don't have to train your underwriters to do something totally radically different. They're going to see the same grids, the cost approach, the income approach, all those things that they're used to seeing on a URIR.
It may not be a good time just to say, part of the general appraisal modernization from the GSEs is going to be a revision of the appraisal forms. We're going to see that, and actually it will be one form that the appraiser will customize for a different type of appraisal, but more on that to come. It will still probably follow a very similar format to what we have now. It will just be condensed and much easier, and it probably includes some data from the GSEs too. So, but more to come on that.
We have roughly 5 minutes left, so I want to respect everybody's time. There's some good questions in here. Christy Adams asks, hi, Christy, is there an implementation fee to get this started? No, there is not. Training. Yeah, we would train you on how to order the products, but we really want to keep your borrower, your realtors, and you guys out of the process of having to do all of this data collection. So we're doing it all for you turnkey. So all you have to do is sign up with class as a vendor. And once we're a vendor for you, we set up our normal appraisal services, and all of the options for property data, hybrid, desktop, everything else will be there for you. And we'll train you on how to order what, when, and we'll work with you to order those products appropriately and train your staff too. Thanks for the question. Great question. How do the appraisers feel about this as it cuts into their profit, correct?
Shall I take that?
Yeah, you went. I can, but let's have you start for sure.
As the appraiser. So I think one of the things that we talked about appraiser capacity, and during 2020, 2021, the appraisers were underwater. They could not cope with the volume they had. And what we want to do is keep appraisers, we want to keep them profitable, and we want to keep them efficient. And by allowing them to do more desktop hybrid appraisals, it takes them out of the field, which is the time-consuming part. So if you look at, particularly when you look at these hybrids and desktops, they're really very similar to a 1004, but you take away all that time out in the field. So actually, they'll be making more money. I think when they're looking at their hourly rate, which, I think we have to kind of teach them to do, they'll make more money in the end. And they can do more of these because they won't spend all their time kind of staring out of a windshield and taking ridiculous photos that they don't have to take. So I think it will be, once they understand the efficiency and the time saving of this, they will realize that they will be far more profitable doing these types of appraisals. And we're not trying to get rid of appraisers. We cannot get rid of appraisers. We need professional appraisers. It's not a profession that's going away. It is just changing like a lot of other professions. And so I think that they will get it. There are still appraisers, I understand, who feel that their job is going out to properties and measuring them and walking around. That really is a very minor part of what they do. So we want them doing the analysis. We want them determining value and doing that kind of thing, not walking around measuring houses. I think they can make more money by being at a desk. What do you think, Mark?
Oh, totally agree. I was talking to a good friend of mine who was a chief appraiser at several mortgage lenders, and is in Texas, and is kind of nearing the end of his career. And he's got a plan as he's getting his next certification. He wants to retire in 3 to 4 years. And he told me flat out, he's already doing desktops, by the way, for us and for other AMCs. And he was just telling me the desktop is basically 80% of my plan for all of the appraisals I'm going to do going forward. One, because he just doesn't want to drive all over the Dallas metro. And two, it enables him to do 5 or 6 orders a day without leaving his desk. He doesn't have the depreciation on his vehicle, doesn't have the gas mileage, doesn't have the risk, the insurance of being out there. There's a lot of scalability for them when they can just take and use, in his case, his 30 plus years in that market. As a very experienced appraiser, he knows all those areas, all those enclaves. It's easy for him to take the data and just use it and do it. There's a couple of other questions as well.
I think Jennifer's here is kind of a good one about the new construction, construction to perm. actually, you know, that's still a construction firm is probably the first real actual desktop appraisal. Even though you go out to the site and look at the site, you're actually determining the value based on plans and specs. It will still, so, you know, it's kind of a somewhat of a moot point because that, you know, you got to inspect the site, but really you're doing it at a desktop. Drawer inspections do not have to be done by appraisers. And for a long time, TrUnion has not actually, in many markets, does not actually use appraisers. We use an inspection company, very successful to do that. So,
and I will say, I'll add back to the construction to perm. Stay tuned on that one, Jennifer, and our credit union friends. There's actually technology that we have in this process on Proper Data Advantage that allows us to take a piece of dirt and the plans and specs and actually virtualize the home. And that's something that we're actually working on right now with several with several partners in test. I think you will see this process applied to that, because think about it for a second. Right now, if it's a plans and specs appraisal for a new construction, what are you doing? The appraiser's going out there, you're looking at the dirt, right? And then you're saying, okay, here's the home. Let me find comps or whatever comps I think are going to be built here. And I'm going to give you an estimate essentially, right, for when this home is built, what it's worth. Then I have to come back and I have to see if what was built matches up to the reality of what I had on plans and specs before. Well, if we have full plans and specs from a construction builder, right, and we know all the amenities, the materials, everything else that's going to go into the home, approximate colors, all the rest of it, there's actually a very powerful case to be made that we can actually use the virtualization technology you just saw there to create a virtual model of the home, give it to the appraiser, let them appraise that and say, this is what it should look like, or approximately what it should look like. And then 6 months later, when it's done, come back and verify that it actually was built the way it was supposed to be built. And if the variances are there, what are they? Right. And then you as an appraiser can start adjusting from there. So there's actually some really cool future application of this that, and I say future, but I mean that it's probably the very near future. So stay tuned for that. That's an exciting topic. And it's one Jennifer and others who are on the call doing new construction lending, we would love to partner with you on and get some input.
Crazy good, Mark. But you know, we need to announce our winner. We've gone over.
Yes, let's do it.
Do
Let's
it?
do it.
Yes. And I
Who is our winner?
Our winner is Mr. Jeff Gallery from USC Credit Union. Congratulations, Jeff. You are the winner. We will ensure you get your Godiva chocolates and happy holidays.
And share them with the office with our compliments. Jeff's like, yeah, whatever. I'm not gonna do that. I'm kidding, Jeff.
No, I wouldn't.
But we're very happy that you won. And for all the rest of you, thank you for the attendance today on the webinar. If there are any other questions, I think I'm still sharing screen here. Sally and I can be reached at these emails. We will send a copy of this presentation out through ACUMA to all of you. We also, as I mentioned, have that free guide for operations that's for your operating people, not for sales or for customers, but how to deploy the and all the different aspects of the PDR and PDC. So email us personally for that. We'd be glad to give it to you so you can start educating your staff on it, and glad to follow up with you on any of the educational needs here. Several of you did ask how you could become a vendor or we could become a vendor for you. It's very easy. You can reach out to me directly. I'd be glad to work with you through vendor management and a contract. And then getting up and running with us is extremely easy, and we will put all these products at your fingertips and provide a great service experience overall doing it. So thank you so much for the time. Any last words, Sally, before we 3, 2, 1 and out?
Yeah, we are there at that time. Thank you very much, everyone. We really, truly appreciate it. Reach out to us if you need anything, if you want to know more. And for those of you who we do work with, we love you. And for those of you that are interested, please join us. We would love to have you as part of the family.
Thanks so much, everyone. Have a great holiday season. Thank you. And thank you to ACUMA for hosting this with us. Appreciate all of you. Take good care.
Bye-bye.